aufzeichnen. Yes, so thank you very much, everyone, for attending the webinar. As mentioned, feel free to make any questions, raise your hand, and you can also put your microphone on when you want to speak. It is a small round, so very much appreciate, and I appreciate you very much. Thank you for being here on a Thursday, 7 p.m. I want to talk today a bit about ETF investment. This is Samuel, but I don't want to go too much into like introducing ourselves, because this webinar, it's more like a small introduction, like a small gift for everyone who wants to start investing in ETF and is not sure how to start and why to start. And I want to be as practical as possible and show you guys how I started, what is important for you to know when to start ETF investment. And the same will Samuel do for real estate. But I think real estate are much more complicated, so I don't know how he's going to do that. But okay, let me tell you a little bit about myself. I don't know. I started ETF investment. So hi. Hi, Ashish.
Hello.
Hello. So I started ETF investments about 2000, maybe like 7 years ago, when I also like started my financial business. And funny, I come from a real estate family. My grandfather, he moved in the 50s to Spain and built it, I would say, maybe a little real estate empire in Spain, where the next generation lived out of that. Like my uncle still have the business and still keep buying land and property. And this is how we, what my family does. But I grew up with my mom. My mom and my dad, they were 1 year together. So I lived with my mom. I knew what my father's family is doing, my Indian family. Of course, there are always like the entrepreneur-minded people. And yeah, I never thought that real estate was possible for me. So I was never like really in touch with my family business. And my family, well, my mother and I, my mother's family, her new husband, we moved to Germany because my stepdad, he is German. We moved to Germany when I was 5 years old. I was born in Spain. And when I was 12, we moved back. Well, we moved to Germany, sorry. And then when I was 12, we moved back to Spain and then back to Germany when I was 24. So there was like a lot back and forward. So I've been an expat basically since I'm 5 years old. I moved to Mexico in 2022, 23. For people who don't know that, I was not in Germany the last years. I have my business in Germany, but I moved to Mexico. In Mexico, I met a cute American boy and I moved to the US, and now I'm in the US. So I've been an expat forever. I have my business in Germany. So I've been always struggling with finding a financial tool that serves me while staying in one place and building up wealth and wanting to move to another places. And this is why ETFs served me very well. And are there people that don't know exactly what an ETF is? Okay, good. So I'm the typical investor, and Samuel will like criticize me. I'm the typical investor that has no goal. I'm a person with no goal. This is my personality. I'm a traveler. I don't know, if you tell me tomorrow, Alicia, let's move to this country, this is a good opportunity. This is a fun country. I will move there with my family in a heartbeat. I'm very flexible. I'm a forever expat. My family is international. And this is why ETF were very useful for me because I have no goal. And many of my clients and investors who started, I asked them, what is your goal? And sometimes people just don't have a goal, and that's fully okay because no goal is also a goal. And right now I'm going to share and to talk a little bit about this wonderful tool, ETF. You say a very nice analogy, Samuel, with the train. What is your analogy about the passenger?
It's always the question, how much time do you invest in financial knowledge? Yeah? And I always compare this, and I mean, we are sitting together at 7 p.m. on Thursday. I'm really happy about that people invest in knowledge. And that's why I appreciate you joined today. I always compare this like, imagine you sit in a train and you go 8 hours in one direction. I mean, you work 8 hours a day, you work 10 hours a day, and imagine you're sitting in this train 8 hours in a row. And let's say at the last hour, in the last hour, your neighbor on the neighbor seats is asking you like, yeah, where are you going to? What is your destination? And imagine you would say, listen, I don't know. I don't know where I'm going to. I'm sitting already 8 hours, but let's get surprised where we will end up. So this is how I always compare people when they work a lot. They spend a lot of time to earn money, but they don't know what to do with this money. They don't know what to do, how where to invest. So it's really, really, really important. It's always good to invest in assets. It's always good to invest in ETFs, in gold, in real estate. But first of all, please do yourself a favor, invest in your mindset, invest in your knowledge about products. And that's why it's really nice to see you today. Alicia.
Thank you. That's totally true. You see, and this analogy is really, really funny because I'm the passenger without no, like I have a clue, but with no goal. Since I'm going to share with you guys one of my ETF portfolios. And what is an ETF? Like ETF is a short version for exchange trade fund. It's very similar to mutual funds, and it's basically a basket. You can see it's like a basket where you invest in different like bonds, and you can invest in different like countries, in different categories, in different risk class. So it's very, the variety is vast. Let me show you my portfolio. And I'm going to talk also about the benefits of ETF and how to start. So first of all, if you're in Germany, it is very important that you have another account besides your bank account. It calls a depot, and it serves you to put money out of your bank account because in your bank account, money is dying, and shift it to your depot. And a depot is basically also like a second bank account where you can start making your investments in ETF, in mutual fund, in the stock market, in certificates, in bonds, and dividends, wherever. So it's really, this is a must-have, a broker account. I would say don't sweat it too much which broker account you have. I do work with Comdirect. For me, it's like a very good tool, you will see, but it's not about Comdirect today. It's more about what is inside the ETF. But do yourself a favor, don't look too much about the perfect depot. It's important that you start, because at the end, I think many depots are the same. There are some depots that are more expensive than others, but working and investing with ETFs are anyways, and this is one of the huge benefits, very cost efficient. So here, even if you have like a more expensive trading platform, it will not direct harm your ETFs, for sure. So the first benefit, what I mentioned, ETFs are very cost efficient. And I'm going to show you, this is one of my portfolios. If you see, I have certificates, I have funds, I have shares, mutual funds, and here my ETFs. shares, shares, shares. Let's look at the numbers. Let's start with the Vanguard S&P 500. I think the S&P 500 is one of the most popular ETFs. And an ETF, I really think everyone should start. The S&P 500, you invest in the 500 more successful companies of the US. So it's like it's basically a US fund. Well, Vanguard is from Ireland, but it's concentrated on investing in the US. Right now, this ETF, so this is the code of the ETF, gave me 541 euros. So the value or what I invested is 2,758 euros so far. But my value is 3,290. This can change from day to day. This would be, for example, if you need money, a good moment right now to like take some money out, you know, to verkaufen. If we look further and you see the Aktien is in minus right now. My ETF is in plus 124, Nike, minus 600 euros, Nestle, minus, ETF, boom, plus, Nasdaq, plum, plus. So my ETFs are in plus. Everything else is in red. And it's been going like this for many, many years. Besides Corona, of course, where my ETFs are constantly giving me some return of investments. And this is why I like ETF. This is a good way to start investing, maybe €1. If you have only €1, 20, 50, 100 euros, whatever you can, into a basket that is cost efficient, that is not too risky, and gives you constantly returns. Let's see, let's take the S&P 500. FundsWeb. FundsWeb, please note this website. I love to work with this website. Most financial advisors will work with FundsWeb. It's an independent funds searcher, ETF searcher, where you can read more about the funds and ETF you're choosing. So let's take this S&P 500. And I copied right now the VKN number, and ESIN numbers are basically the international numbers for those investments. So this is the S&P 500. And let's see in the past if we would have a one-time payment of 1,000 euros. It has no cost. And I'm putting right now, let's say you put 200 euros per month. What is the result? So this is from the past. This is a real result. It's not from the future. It's not a speculation. It's real. So 200 euros, with 200 euros would give you, so mit der Einzahlungen, 14, Depotwert 14,397. So much, much better than in your bank account. And we are talking here, I know this is only 4 years, sorry. Sorry. Only 4 years, only 4 years. I'm going for 10 years, sorry. 10 years, wow. So 24,000 is your input and your output is 52,000. And of course you have to pay taxes on that, only on the winnings, Kapitalertragssteuer, that is in Germany 25%. But still, it's with only 200 euros and one-time payment of 1,000 euros, you can make your money work without taking too many risks. Here we have this down. This was in Corona. But still, we survived. It went up again. So Corona was bad, but not too bad. Like in single shares. I lost a lot of money with single shares in Corona. So going back to this ETF. Obviously, if you invest more than 50 euros, I recommend to invest in different countries and in different categories. For example, in technology, in commodities, in Konsumgüter, like how you say Konsumgüter, consumer goods, in artificial intelligence, and maybe emerging markets. India right now is thriving. Indian ETFs. This is my next purchase for sure. So make sure that the more you invest, the more variety you bring into your portfolio. And this is what I also coach in my sessions, where to put the money into which countries, which branchen, technology, artificial intelligence, a green fund, etc. So there are about 5,000 ETFs in this platform and 49,000 mutual funds. So there's investments for every risk class and everyone. And again, this is the beauty of the ETFs, and it shows you with the green numbers in my portfolio. What I like as well is the flexibility. I can, for example, if I need money or I have a bigger purpose, because at the end, an ETF portfolio is a midterm investment tool. It can serve as a long-term investment tool, but for retirement, I would use another source than a pure depot. I can, for example, see when I see my numbers in green. Let me take a little bit of money here. So I could sell Verkauf. It's very easy. And I could write here, for example, which sum I need. If I need 1,000 euros, if I need 2,000 euros, I can sell it. And in 24 hours, I would have the money in my bank account. Or if I don't like the ETF, I could reinvest this money into a new ETF, into a new mutual fund. So far, so good. Then Corona come. I want to talk a little bit about Corona. Corona, I was like, it scared me out, Corona, because not only for my clients, also for myself, portfolio that we built up over the years went down and no one really know what is going to happen. So after my ETFs recovered a little bit from Corona, I didn't sell them. This is the most important thing, that in crisis, you keep your portfolio. I decided to take money out of my portfolio and to invest it in my first real estate. Not out of knowledge, out of fear. But at the end, it was like a really good investment, because the ETF portfolio that I had served me as collateral to have the flexibility and the amount that I needed to buy my first real estate. And it was a very spontaneous buy. I was in Tulum having a vacation, and I met like a lady, and she is a real estater, a wonderful young lady. And I built up trust very quickly with her. And she offered me a nice flat under construction in Tulum. And I went for it. And I could be so spontaneous and do such a good investment because I had my ETF portfolio. I have also like a retirement account and other investments, but the liquidity that I had to do a bigger investment come from my ETF, and not from my past shares. Like my shares, they always go up and down. The ETF, they stood strong. And thanks to my investment that I did in the past, I used to put a lot of money into ETFs. I think from 1,000 to 1,500 euros a month. And I was really eager, and it was constant. I was very constant on that. I could, over the years, build it up a very nice sum, and I could go into the other investment. It serves you also when you want to be independent or you want to make a beautiful trip. You can have can build up different saving plans in your broker account and give them names. For example, one is like invest in yourself. The other plan is for my daughter, for her driver license, or when she wants to travel when she's 18. So I'm using the same leverage effect that I use with me in the years for her. So she has similar opportunities. And as mentioned, you can start with €1. €1, I think, with Comdirect, and with other platforms with €25 is very, very great. So this is the story of ETF. And then I continued traveling. And in Mexico City, after Tulum, I met another person in the cafeteria. And he was also a real estater like you, Sam, similar as you, Samuel. Not as sharp, I have to say, but
Oh.
he was also a realtor. And I believe in sign, guys. You see, I believe in signs, and if I meet a realtor in a cafeteria, I think this is a sign for me to buy. This is my way of believing in the universe. So he was a realtor, and he was selling apartments in Mexico City, and I went for it. And I had the money. It was I think he needed like 20 to 40,000 as equity, and I could only do it because I was so eager with my ETF portfolio over the years. So it took years, but I had this flexibility from my ETF portfolio. If I had this money in my bank account, it will not survive, because everything was in my bank account, I spent. So I have to like shift it away. That's why I always recommend to have just a second account to your bank account. So you don't have the spending behavior. And also very important to know, ETFs are great, but why I bought the real estate, because at the end, if you take the whole ETF amount out, let's say I had there like 70,000. I have to pay taxes on the 70,000, and on top, I don't know how long it will serve me. I cannot really live forever with the 70,000, but I can live out of a rent forever if I like, or if I get sick from a real estate. And this is why I brought also Samuel into my consultations after Corona, to like tell people, yes, it's good to have other investments, but please make your goal be a little bit bigger, and to look at the big picture, because a real estate will always give you, if you rent it out, will always give you a passive income over the years, and then you can go to pension. And then it is very useful when you cannot work, or you have a disability, or you can pass it to your other generations, like my family did. And since I'm in the real estate business myself with 2 little flats, well, I started small, my family got back to me, my Indian family, and say, oh, we see now that you are responsible and you do something with your life. Not like that, but we want you in our business. And this investing and opening my mind to real estate make them see also that I was valuable to their business. I have to say, it's a very like it's a business run by men. So I think I had to prove myself a little bit more. And now they asked me to participate in their real estates, and their real estates, in case of that, are now in my and my daughter's name, what I really appreciate. Just by doing those kind of investments. Funny. Yeah, but this is my story. This is how I started with ETFs, why I like to coach ETFs, why I believe so much in ETFs, because they serve me. They work so well out for me, especially as an expat and a person without a real goal, an investment goal. And someone and I, we met in Corona, and he showed me what he does and presented his business and asked me if this was interesting for my partners, for my clients. And I was like, yeah, let's give it a try. And it's been now 3 years, and you've been helping more than 20, 25 clients to like really gain passive income, and it's working. And thank you so much for that. And this is why we keep working together. And I want to hear today, and I hope people want to hear your story, why real estates, and how we can, also with smaller mindset like me, as I had, how we can start investing in real estate. Is it possible for everyone?
Sure. Thanks, Alicia, and I appreciate what you shared here. And yes, you're right. I'm not investing in ETFs, not yet. Maybe you should convince me one day. I don't know, in the future maybe. But yeah, I think everybody of us, in everybody in Germany, everybody around the world has or should have a reason why to invest. And I think a lot of people and a lot of clients we had in the past, they thought about different things. Like you said, you mentioned already, you have a small daughter. Yes, I have a small boy too. So I'm thinking not only about myself, not only about my goals in the future, but also about my kids. And I think, as I said, everybody has his own goals or should have. And one question to you all in the beginning. What do you think? I mean, we were talking about kids, and let's also talk about the future. Like, what do you think? How many people get right now more than 3,000 euros of pension in a month? What do you think? You can write it in the chat. I'm really looking forward to see your answers. What do you think? How many people in Germany, especially in Germany, how many people right now get more than 3,000 euros in a month? Somebody wrote 30% or 30 people. What would you say, John? 30 people, okay. Less than 10%, okay. Does anybody, okay, 20%? Interesting. 15%. Actually, this question I was asked, let's say, half of a year ago, and actually I answered the same, almost the same, except of what John answered. I answered, let's say, around about 5 to 8% in Germany, because I mean, we're living in a nice country, in a wealthy country, and we have a nice system. Everybody, like the government takes care of us, should be like this. But John, you were the closest one. Actually, I Googled this number today again, because back then it was 80 people, 80 people in whole Germany. But I Googled this and I got the information today, or I saw this information. We have 50 people in Germany which get 3,000 euros or more right now as a pension.
What
And
happened? Did they die? Like, because it was like higher.
it was 80 people,
80 people.
half of year. I don't know, maybe. I don't know. I don't know. So right now the current number is, you see, from the 21st of April, it's 50 people in Germany. Just think about this number. And just think about how much money do you need right now to purchase your lifestyle. And I can tell you a little bit about my story parallel, because during this meeting today, during this webinar today, I will tell you, back then, 2017, 2016, 2017, I thought about the future. And I mean, back then I was 25, 26, now I'm 32. A lot of people, when I'm talking to them, I'm talking about the pension, the future. Yes, I'm 32 and it's still 35 years to go. But it's not only about 35 years working and then get a higher pension or to build up something for the time after working life, but it's also about to understand, if you don't invest today in the early, like in the younger years, then it will be much harder in the future. And it's not only about the pension, but it's also about build up a little bit of wealth, a little bit of value. And that's why we sit together today. That's why we have a webinar today. And I think it's really nice to see how Alicia, for example, in this case, she invested in ETF because she had her reasons to be flexible. Yeah, and I would say we are all of us, we are different people of like different investment characters. Yeah, and I would say everybody has his own goal, and I always compare people like everybody has this priority, like how do you say, yeah, priority. I always show these pictures to people when we are talking about different investments, and I think a lot of people, they are more about safety, security. They want to have a secure life. They want to not to yeah, they want to um, reduce the inflation rate in, and then they invest in assets like ETF and gold and whatever. So safety is always a very important point to talk about, and also liquidity, and also about profit. So my what I always suggest is to spread the investment in a few assets, and it's always nice to have something on a bank account, like a Tagesgeldkonto, for example, just a bank account where you save up a little bit of money. And as Alicia said, an ETF is a nice thing, like a midterm investment. Yeah, and besides of ETF, for example, there are different products like gold. But today, and as Alicia said, I'm more this real estate guy. And today I will tell you a little bit, a few facts about real estate, about investments in real estate. And I will show you how I did it, or how I do this, and how our clients do this, which we, yeah, with which we do the consultation. And everything what I'm showing here, you can Google, you can, and also we can, for sure, we can have an individual call where we go a little bit deeper in this topic, because in half of an hour it's not possible to talk about real estate, like about everything which is connected to real estate. So why do we invest in real estate, and why did I invest in real estate? There were different things. I mean, first of all, I'm more that guy, like, yeah, I would take more risk than other ones. This is what I would say, but that's why it was always important for me. Okay, how much profit do I do with the product where I invest in? And I can tell you, with the real estate, we had in the last 40 years, we had 4.6% in one year where the prices increased. So it could happen like 2008, or in other years, it could happen that the price didn't go up like 5, 10%, but in average, we had 4.6%. So you buy something today, and a lot of people, they say, listen, Samuel, this is not realistic. I mean, what happens in the future, or what will happen in the future, I cannot say. I have no glass bubble, and nobody of us has this glass bubble. But what we can say is what happened in the last 20, 30, 40, 50 years. And the question is always, why do the prices increase all the time? Because the demand is there. So every time when there's a demand, the prices go up. So we get more and more people in this world. We have round about 8 billion people in this world, and we get more and more. So there's a need to yeah, for places to live in. That's why the prices also go up. The second big benefit, I would say, or why I did it, I mean, I'm not married, and I would say I earned good money in the past, in my when I was an employee, and I wanted to reduce my tax payments. So I wanted to have a higher tax return. And this is what you have with real estate. If you invest in real estate and you give them for rent. So there's a huge difference between a real estate you invest in to give it for rent, because it's like a company where you can talk about depreciation amount or whatever, and then real estate where you live in. So this is something we always do in individual calls. We can calculate exactly, or pretty exactly, with your percentage of, like, your salary tax percentage. We can calculate how much would you get with a specific real estate as a tax return from the government. So this was one very, very important point for me, because I saw how much I spent, like how much I paid to the Finanzamt in Germany, and I asked myself, okay, is there an option to get it back? Not all of it, but part of it. So a real estate is always a good tool to get a high tax return. The third point why I invested in real estate, I thought, okay, I was thinking also about security, safety, and I thought, okay, we are living in a welfare state. This means the government or the state takes care about people which has a problem. For example, imagine you buy a property, you're the landlord now, and let's say the people which live in, they get unemployed. What do you think? Who's going to pay the rent? I mean, in the first year, you get 67% of the last net salary. In the second year, if you don't find a job, I can tell you the job center takes care about the payment. So it was somehow it reduced my risk as a landlord or as an investor. And because I was thinking about tax returns, I was also thinking, okay, now I buy today a real estate. What happens if I sell this in the future? And we can compare this, I mean, with ETFs, for example. Alicia mentioned this. Alicia, if you would sell it today, you already said like you would pay 25%
On the that's
on the
correct.
profit of tax. Yeah? In this case here, because it's a long-term investment, we always have to think about 10 years, 15 years, 20 years, because you don't buy a real estate today and you don't sell it after 12, 24, 36 months. You could sell it, but you have to know in Germany, if you buy real estate and you hold this real estate for at least 10 years, you can sell it tax-free after 10 years. So this means, imagine you buy something today for 200K and you sell it tomorrow for, not tomorrow, but in 10 years for 250,000. For those 50,000, you don't have to pay any tax. In the beginning, yes, you have to pay tax to the government because we purchase a real estate. There's a rule, you have to pay tax. It depends on in which state you invest. But at the end, when you do your profit, and this is always the goal, to do a profit with the real estate, you don't have to pay any tax for it. And the fifth benefit I saw back then when I invested in real estate, 2017, and we are talking about made in Germany. So we are not talking about made in Poland or made in Spain or whatever. I mean, and I guess there are a lot of nice apartments and buildings, but somehow I trust the quality of real estates in Germany. Okay. Now you see here's a question. Do you have to declare the profit made from you while doing tax declaration? No, you don't have to do this. If you sell it in the future, after 10 years, then you have to mention this, but the government will see you hold it 10 years already. So it's really important, really important not to sell it before the 10th year. So if it's after 9 years and 300 days, you have to pay tax. Okay, but for example, about tax return, these points, I mean, it would be too much today, but this is something what I spend my time to explain it in detail when we have an individual call. Yeah. So I was thinking back then, 2017, I was thinking, okay, I did a calculation for myself, and I think it's always important to have a goal, Alicia. I think it's important. So I was thinking, okay, now we have the number 4.6%. And back then I thought, okay, if I would invest today 400,000 euros, 400,000 back then, 2017. I was thinking, okay, how much, back then I was 25, yes. Back then I thought, okay, how much would I do in 10, 20, 30 years? Yeah? And I did not calculate with 4%. I said, okay, I will just calculate with 2% in 1 year. So it's half of it what we have out there in the market. So let's calculate with just 2%. And what do you think, guys? What do you think? How many years with the current numbers? I can tell you round about 4% of interest charge and 2% of repayment, because this is the initial amount. You have to pay fee to the bank because you borrow money, and also you have to pay back the 400,000. Yeah. What do you think, in how many years would you, like, if I would take 400,000 today from the bank, in how many years would in how many years would we pay back the loan until it's 0 year? What do you think? How many years would this take? Does anybody has a clue? 30 years? Okay. Anybody else? It's actually easy to calculate, and I always suggest, or I always use one website. This is what I can, yeah, what I really appreciate. We have a free website in the internet. The website is zinsen-berechnen.de, and where I always calculate all my assets and all the investments. So here you can type in how much you took from the bank. Actually, here I calculate with 300,000. I'm sorry about that, but actually, if it's 400,000 or 300,000, it doesn't, there's no difference. Let's see, after 300,000, oops, here, and let's take the 400,000, and it will be the same number, 27.5 years. So you're around about, like, it was almost right with 30 years, and there's always a saying, like, in 30 years you pay back in home in Germany. So it actually, it depends on how high is the repayment, it depends on how high is the interest charge, but it's around about 25, 30, 32, 35 years. So back then, 27.5 years is what I also calculated. And I thought, okay, now imagine, this is the very, very hard thing about, not hard thing, but it's something you have to learn when it comes to real estate. You have to invest today, but get the feeling of tomorrow. And how do we get the feeling? If we calculate, okay, how much would we get if we would sell it in 27.5 years? And because we know the number from the past, 4.6%, and as I said, I calculate with 2%. Let's calculate with 400,000, and 2% every year would be, after 27.5 years, would be the new value or the new price of this property would have to a 689,000. Yeah. So let's just take the 680,000 round number. And the question is always, how much do you invest in this real estate? And the good thing is, we have tenants, and the tenants pay the rent. So let's assume that you pay for this property for 800,000. Let's assume that you pay 800 euros out of your pocket. This means the tenant pays the rent, the tenant pays the site costs. You have to pay the site costs to the building management. You have to pay the interest charge. You have to pay the initial amount, and you have to pay also other expenses to the building management. So let's just calculate with 800 euros times 12 months, and we take those 27.5 years, because this is the time period until you paid off everything. So 800 times 12 times 27.5 would be 264,000. And now I mentioned already, we have some payments in the beginning, because you have to pay tax and you have to pay lawyer costs and registration costs. So let's take another 40,000 in the beginning. So in total, it would be 304,000 euros. Now imagine you invested 304,000, but you sold it for 608,000. You took, I mean, in this case, you borrowed money from the bank and you worked with this money. And here's always the question, how much do you get from the bank? And how much, like, the bank values you, the bank values the property, and then they will decide, okay, will we give you the 400,000 or not? So it's something if you get something from the bank, it's a nice chance to invest. It's something really nice because you take the money, you work with the money, and you pay back money to the bank account in 27 money to the bank in 27.5 years. And here's one very, very interesting point. And what I back then I did not really realize, because I was young, I was not let's say I was not that educated about real estate. But what I experienced in the last 7 years, I can tell you, this is a very, very nice point about real estate investments, because this investment in the beginning, these 800 euros, this is something we can already say will not stay the same, because what happens out there on the market, the rents always increase. I mean, if I'm wrong, you can tell me. If maybe somebody of you got the letter in the last 5-10 years from the landlord, which said like, listen, you're such a nice guy, such a nice lady. You have to pay, or you are allowed to pay 50 or 100 euros less from next month on. I didn't get this letter. Actually, I got the opposite. I got the letter, listen, Samuel, please pay more rent because the market price went up, because everything went up. So actually, why do we not use this opportunity, this option, and build into our plans with the investment? So I can tell you, and I will show you what happened in the last 7 years, because it's not only about the rents, yeah? It's not only about valuables. It's the question is, how can you use the first real estates to build up a portfolio? And now I'm going to show you my story from the last 7 years, and we already calculated, or we already saw the value went up. I bought back then 2 real estates, so 230,000 and 170,000, together 400,000, 2 real estates. So the value went up, and also automatically the remaining loan went down. So this means there was a gap between value and remaining loan. And the good thing is, and this is, I didn't mention back then, or I didn't mention in this sheet when we talked about benefits, because this is something I experienced in the last 7 years. I didn't see back then when I started. Yeah, I knew I will get a tax return. I knew the price will go up, but I didn't see. This is what I experienced in the last 7 years. This difference here between value and remaining loan, I used, this was 2017, I used 20 and 21 for the next real estate. How did I use it? Every time when you ask for a loan from the bank always wants to know all about you, because I mean, imagine you would borrow somebody, a private person, 400,000. They want to know everything about you. They want to know where you live. They want to see your bank account statements. They want to see your Schufa. They want to see, do you have an unlimited contract? Yeah? Actually, by the way, these are all things we need to get a loan. Yeah. So that's why the bank always wants to see everything about you. And then they decide, okay, we will borrow you this money. And 2021, I asked for a building with 4 units. So the bank always wants to see where did you invest in? Yes, I could have invested in ETFs or in gold. I did actually invest in gold, and I did actually invest one time in shares, but thank God I invested back then into real estate. So the value went up a lot, and the remaining loan went down. And this security, or this difference here, I took as security for the next building. So I got on higher loan, I got better interest charges, and the possibility was there to invest in more units. Yeah. Not only this, not only because the value went up, but also what happens out there on the market. I mean, we have a very, very nice chance in Germany. We live not in an owner country, but we live in a country in like a rental country. Yeah? A lot of people, most of the people, they live in rental apartments. So what happens out there? Tenants move out, tenants move in. So 2020, no, actually, yeah, 2020, my tenant moved out in one real estate. So I would be not really smart if I would not increase the rent. I mean, I can tell you where you live in right now, the tenant before for 99% didn't pay the same rent. You pay more than him. So what did I do? I was a little bit more in real estate since 2017. I started thinking about more and more about real estate. So I thought, okay, how can I develop this real estate a little bit faster and more like to get a higher income? So actually back then I furnished the apartment and I rented out furniture. So this helped me also for the next building because the bank is not only about the value, not only about what you have on the bank account, but also the bank always wants to see um, what is your income. So now imagine you have an income and then you also have expense. Now imagine you have your salary and on top of your salary, you have a passive income, number one, number two, number three. So that's why I started thinking about, okay, how can I build up as fast as possible my like passive income? And this is one of the best tools which you have if you rent out an apartment. And also, if you develop apartment a little bit more, like I did, or like we do with our clients, what we offer to our clients, furniture to increase the rent, to do the management, so we get a higher income because the expenses stay the same. The bank rate, the monthly bank rate, is the same for 10 years. You negotiate with the bank in the beginning, then it's fixed for 10 years, 15 years, or 20 years. You can decide. So 2021, I bought a bigger building with 4 units. So what happened there? I had 2 empty apartments, and those 2 empty apartments, I did the same system. So there's always, I can tell you, it's not possible. I mean, if you have some millions on the bank account, it's possible for sure. But if you start slowly, and I can tell you back then, I didn't have really, I didn't invest. I didn't have bank money on the bank account. Actually, I had a debt of minus 12,000. So I managed to take the minus 12,000 and to take it on the 400,000, and I got everything from the bank. So I said, like, instead of paying off my car, which is not really smart, I will pay off in real estate, which gives me passive income in the future. So um, if you have more money in the beginning to invest, then it's easier. But what I experienced in the last 7 years, you never invest like this. You always, or you never build up a portfolio with real estates like this. You always build up a portfolio like this. For me now it's more easier because now while I'm sitting here, my tenants, they're working for me. Yeah, money never sleeps in this game. It's like Monopoly. Yeah, you're sitting on one position. The people they go by, but they have to pay the rent. So the good thing or the most important thing is and to earn money while you're not doing anything about it. And there's always the question, how can you do this? Like, how can you make it really easy for yourself? Because a lot of people and everybody of us, we spend a lot of time in working, and especially expats, what I experienced, work a lot, yeah, 8, 10, 11 hours. So the question is always, how can we have a nice service, or how can we, how do you say, how can we manage it as good as possible so you don't have to invest a lot of time because time is money. And what we offer to our clients, everything what I did in the last 7 years. Actually, I had a mentor too who taught me everything, and he told me everything about real estate. He told me how to furniture an apartment. And so everything what we experienced in the last 10, 7, 5 years, 3 years, we give to our clients, we show clients, we do the consultation, and we do the consultation from, I always say, from A to Z. So this means we take care about, we calculate an individual plan. Yeah, we calculate, okay, this is what you have on your bank account, what is possible with the money you already saved. So that's why I always say it's an individual consultation. Yeah, we always do individual consultation, and also what you already see. I mean, it's a consultation in English. I think most of the real estate agencies out there, they don't offer this kind of consultation. Not only about this, we don't only show how to invest in real estate, because not only how to invest in real estates, but also in which real estates. Yeah? So we have a portfolio of real estates, and we can calculate specific real estates connected with your income, and then we can say also how much tax return you will get. Not only this, but also we have the bank contacts. So we work with up to 900 banks, So this means could happen that the bank in Munich is better than the bank in Hamburg. I can tell you it's the same money. So it makes sense to compare all those banks. So we always check the best offer for you, and then we combine this, like we check the value, or we check the real estate. Also, we check your situation, and we connect this, and then we get an offer. And if the bank says yes, then we go further steps. And also, it's really important for us to guide you through the whole process, not just show you everything, connect you to the bank or whatever, but we also guide you through the process. This means that we go with you, visit the apartment. We go with you to the bank. We explain the document. We explain what is in the purchasing contract, because purchasing contract is very complicated. It's really, really hard to understand. So we explain this in detail. So if you have any question about any documents, we are always there, and we always try, or we actually not just try, but we always answer the questions. And not only this, but also I think one of the biggest benefits we have is after sales. So a lot of real estate agencies out there, they stop with the service when they sold the real estate, when they went to the notary, when they signed the contract. So for us, it's very important to serve you after you bought something, because then a lot of document, like you will get a lot of documents from the management, you will get documents from the tenant, you will get documents from the government, from the city. This is very important for us. That's why I would say a lot of clients from us, they experience a very nice journey, and they recommend us, and they don't stop with the first real estates. And by the way, I have a few clients right now, they bought last year because they understood back then during the consultation, they understood what I did in the past, and they want to do the same. They want to build up wealth and passive income as soon as possible. So this is this is our strategy, how to build up wealth. And by the way, I forgot at this point, in case you have a goal to buy in real estate for your own home, like you want to live in this own home, we also consultate and show how to get faster to the own home with the real estate for investment. And also we also in the consultation we compare in real estate as an investment with real estate as an own home. So we will see differences, and also we will see what is the better way, what is the better strategy. Okay. And the last point, I would say one of the biggest benefits, and we don't take no commission from our clients. You have to know, in Germany, a real estate agency is allowed to take from the buyer and from the seller. So in Germany, there's a law, you're not allowed to just take it from the buyer, but you're just allowed to just take it from the seller. So we work with investors, and they do nothing except of they buy real estates, they check them, they renovate them, and then they ask me to sell them. So they just buy the real estate, and then we come and we check everything, and we just take the real estate, the commission from them, and not from the buyer. Okay. So how do the steps look like? In the first meeting, I always check. I always introduce myself a little bit more in detail, and then I will talk about my services, and also I will get a few information from you. So, what is your financial plan? What is your goal? Do you want to have an own home? Do you want to save up money for the pension? Which investments do you have already? And then in the second meeting, I go really deep into this topic. I explain everything about tax return. I explain everything about real estates. I explain everything about risk with real estates. I explain how does a management work. And then in case you say, Samuel, this is interesting, then we come to a point where I need some information for you on a document. It's a self-declaration. And with the self-declaration, I can ask my bank broker, and he calculates how much you would get from the bank. And with this number, I prepare an offer with an apartment. Yeah, I prepare a specific apartment which is available, and then we will check, okay, is the apartment empty? How much is the price, or how high is the price? How high is the rent? How high is the tax return? This is what I prepare for you. And then afterward, if you say, Sam, let's go with this deal, let's check this, then we get offers from the bank in detail connected with real estate. And then if you say, that's nice, then we go visit the apartment. And then if you decide it's a nice deal, then we go and sign the contract, and then we have everything after sale. So this is roughly the way how to get a real estate. But I always say step by step, and I really try to do this very, very comfortable for you, and to explain this in detail, and then step by step we build this up.
Samuel, for
Yes.
example, I'm myself, and I come to you and I said, okay, interesting, but I have no idea. So you solve the problem of the idea. I have no idea, you guide us, but okay, you wrote it there already. Like what kind of salary do I need to have? This is so important. What kind of, like, because I feel that many people think they're limited to do that, or have limitations. And what is the limitation where you say also, no, in this situation, better not to buy a real estate? Because every financial tool also has risk, but this is another topic. We cannot go too far, but what is required exactly?
It's a very good question, and you saw I already wrote it down, so it was my next point. Every person is individual, and everyone has a different salary. So I would say roughly around about 3,200 is the minimum what we need if you're single guy
or girl.
netto.
Or girl.
Or girl, sorry. Or girl. So 3,200 euros. In case you have very low expenses, then we can start already with 2,800 euros. Okay, but then it's nice to have savings on the bank account. Yeah, we always in Germany we always talk about 10% of the purchasing number. Like, let's, for example, if we talk about 200,000, 10% would be 20,000. This is what you should have on the bank account. Or if not, we can try to ask this also from the bank if they would give this as a loan, but then you need a better salary than 2,800 euros. Yeah, times like in the last 2 years, this changed a lot. Why? Because on paper, we had a crazy inflation. The lifestyle or the life cost went up too, so that's why the bank always calculate much more expenses for each like for each person in Germany. So somewhere between 2,800 3,200 euros. If you have a nice Schufa, this means if you have a clean Schufa, and in the best case, if you have money on a bank account. And one next point, very important, to have an unlimited working contract. This is very important. If you are in probation time, this is probation time, right?
Yes.
Correct? Probation time. There are tools how to get also a loan, but it's nice if you're not in probation time anymore.
Right.
And I know we are working with a lot of expats together. So in the best case, an expert should have a PR. But the nice thing is what we experienced in the last 6 to 10 months, we have banks we work with where we also get for blue card holder and like loans, like offers from the bank. But then you should have a nice salary and you should have nothing in the Schufa, like a clean Schufa, and also in the best case, savings on a bank account between 10 to 15% of the price you want to purchase. So these are the main points. These are the main required things we need from our clients.
Exactly. And so in case, for example, you're young or you have like an entry salary, this should be your goal. Definitely. Yes. After all my experience, because I had it all. I had pension plans, I had ETFs, I had gold, real estate, everything. I can say with confidence, this should be your plan. But before, that's not a problem. You can start easily. Then I would start like with ETF investment. Yes. But I like your calculation, Sam, because you showed us what I didn't know. That because sometimes clients think that, okay, I have 400 euros in my that I can like spare for my investment. And I ask them, so what do you want to do? And they sell their self short, or they think they're limited with 400 euros. But actually, if you have like a nice salary, like you say, or less expenses, it's possible for everyone to enter the real estate game. So I wish I would have this information before that. I said, okay, I have my 1,000 euros. Maybe I have no goal, but then a person like you, Samuel, comes into my life and tells me, no, you're wrong, Alithia. You just, your mindset is not big enough. So thank you for that, and thank you for opening also so many young people, on many of my young clients, the eyes to like help building wealth. And I have another, like here, John has a good question, and maybe you can answer that. He thinks, or is it better to buy for personal use first before buying for investment?
It's a question that would be, I can explain this now in 2 hours. I think it's always better to discuss this in a personal individual meeting, but I can tell you in real estate where you live in it's more an emotional decision. And when it comes to number, right now, especially right now with the higher interest charge, makes no sense. You don't get no tax return for the interest charge. You don't, you pay a lot of interest. And actually, I calculated a lot, but right now you pay much less rent instead of if you would buy the apartment. But this is something, as I said, I cannot answer in 1 or 2 sentences because it's always individual. But what I always do is I always show with the current numbers you have, John, I can show you what's the best way for you, and then we can compare together. I mean, this is not something, maybe I'm wrong, but we can check together what makes sense, what makes more sense for you.
Is there more questions regarding like ETF, or you're welcome, ETF or real estate? Is there something that I missed, that someone missed, that is of your interest, that you would like to know? Because right now is the best moment to like ask questions. silly questions. No silly questions. There's no silly questions, but any kind of questions.
Who asks, he wins.
It's true. Du bist so weise, Samuel.
Since 7 years.
No question. I have a questions. So a client of mine that is stuck in traffic, that couldn't make it. Are they? No, let's answer this first. Restrictions? No, there are no restrictions. When you have like a broker account that works with as many as ETFs as possible, there's no restrictions. I've seen restrictions on some platforms, like for example on Trade Republic, that we were looking for very specific ETFs and we couldn't find it with clients. But I don't know which kind of restrictions there were, or maybe the platform just didn't offer them, if this is what you mean. With temporary visa, which investment in Germany do you recommend? For temporary visa, I would enter the ETF market, like budget, see what you can spare. Because when you move out of Germany, you could, if you like, keep your platform. You could keep also, if you like, a German bank account. You know, many of my clients that move out of Germany, doesn't matter what you Google, they keep the German bank account. They have N26, DKB, or an online account, and keep investing in ETF. Yes, but you could also, if you have other investment tools and you move out of Germany, there's always a possibility that, and I do this for my clients, to get you out. So to write a letter to the Finanzamt when you have also pension plans, to tell them, okay, once you're cashed out, or once the insurance company cash you out, that they are not going to tax you in Germany. It's a German-based platforms. So far this is good because now I'm based in the US. I need to look for US-based platforms, but I'm keeping, and I lived in Mexico, in the US, and in Spain. I kept always my German one, and so far no problem. Yes, it's all in German language so far. Yeah, that's it's a pity, but it's easy to use.
I mean, by the way, I mean, we have our experience with experts, yeah, and now you are talking about if you move out of Germany, for example, especially for expats, real estate for investment, for example, is a very nice thing. Yeah. If you don't want to spend the next 20, 30 years here, but maybe only 10 years, you can use this product as well, because after 10 years, you can sell it tax-free. So there are different, and then there are also different and options if you hold a real estate, for example. Yeah? But this is what I forgot before, because a lot of people think about to move out of Germany in maybe 10, 12, 15, 20 years ago.
For those who have the possibility of using either Germany-based or what is recommended? What are pros and cons of both? So if you, for example, if you live in Germany, it's a no-brainer to open like a German platform. You cannot open a German platform if you live somewhere else. It has to be in Germany. If you're in the US, US-based platform, Germany. But once you lived in Germany, because we, like 99% of my clients are expats or people who are planning to move out by retirement or in a couple of years, so they should be able to start building up wealth in Germany and take it with them. That's the whole purpose of the business, and also the core of the business, like build up your wealth now, even if you're in Germany, even if your heart is somewhere else and you might move somewhere else. I have another question. You're welcome. From my client, he is in traffic. He asked me about the new law about ETFs. So there is like a Vorsteuer. It means that the Finanzamt looks into your ETF portfolio and wants some taxes in advance. So usually the winnings that you generate from ETFs, they are reinvested. And this is what makes ETF investment also very attractive. And right now, the Finanzamt, they saw this and took the opportunity to say, okay, maybe I want Vorsteuer. This is the law that I didn't know about, and I read into it. It never happened to me. I never saw that someone took like Steuern from Comdirect, I have to say. But still, this is, so taxes shouldn't be something that should stop you from investing. And it's not that the Finanzamt wants more taxes from you. They are just saying, I want to take them in advance. But when you cash your ETF portfolio out, it will balance it out. So you're not losing actually money. You're just paying taxes in advance. What is uncool, of course. But in general, it's not getting more unattractive to work with ETFs. And I would say, even if the taxes are high in some places, it shouldn't stop you from investing. This is the right mindset, is to like keep investment and work through those laws, because the laws are the laws and we cannot change them. All types of. So for example, if you refer ETF or real estate, because we're two different ETFs. So ETFs I consult based on hours, and usually clients book 1 or 2 hours. I would say with 1 hour is sufficient. So I charge by hours. So easy is ETF. Just need 1 hour. Yeah, I need 1 hour to create a strong portfolio and to explain everything. And it should be also like a personal portfolio. And I usually say that one portfolio, you can leave it for 10 years. Even you don't need to, like, if you do it right. And if you mix ETF with a retirement planning, because retirement planning is an ETF with an insurance umbrella, usually those kind of institutions, they already like take a commission that I cannot change, cannot take out, and they pay the broker for it, like partially. So this is how it works when you take an insurance, for example, with an ETF umbrella, what can be also very interesting if you're a high income earner and you want to save taxes. Could be a strategy, because I get the question a lot too. Insurance is an ETF. Yes, it's 200 an hour. 200 to 250, depending on the amount, also if it's challenging. And usually, Rose, I take 1 hour, as mentioned. So this is also very like good for clients, that there's only this one-time fee and it's pretty transparent towards other, like, for example, other products, not real estate, where you say, okay, I have like this hourly rate, and then I have like a portfolio that serves me for 10, 20 years. And of course, and the maximum that a client booked in a one-to-one session was 2 hours. And because it was like a very high amount, and it was for him and his daughter, and here's a person, he has no time, he's a CEO, and he said, here's my account number, please do the portfolio for me. And I said, okay, this will take me 1 hour more, but usually a one-to-one consultation, an hour is sufficient. And this doesn't matter if this is US based or German based or in France or in Mexico. This I can work worldwide. This is the beauty of ETF.
What types of real estate are good for investments for a starter? Compare this to a new car driver. I would never suggest, I would never recommend a Ferrari or Lamborghini for somebody who did his license. So we are not selling Ferrari, we are not selling Lamborghini. We are selling this typical Audi VW. Why? Because economically makes a lot of sense. So we take most of out of it, most of others of out of the real estate, sorry, but also in good locations. And I recommend no mini apartments, but and not oversized apartments, no luxury apartments. Um, I recommend apartments like between 2 and 3.5 room apartments, and which most of like the general like which most of the people in Germany use. That is what I recommend. So in good locations, and also with good numbers. This is very important, because if you have good numbers in the beginning, and if you have a good location, you can always expect the value goes up. You can expect that the rent goes up, and then you can build up a portfolio.
That's a good question, Rose.
Actually, for us real estate investors, which invest to rent, to give people a place to live, like to rent out, the higher interest charge, yeah, it doesn't harm us too much, because if you have higher expenses, you can also get a higher tax return. And in the current days, like in the days right now, we can because of the higher interest charge, it takes more, or it takes longer for real estate agencies or for seller to sell something. So now it's nice to negotiate with the sellers, and actually now we have a buyer market. Yeah? And it's I can tell you right now, it makes a lot sense to invest in real estate. This is what I experience, because now you can negotiate a lot, and also the market. Now you will see the market, the price went up crazy. The price went up much more than the rents went up. Now the rents go up. So during this time now, the price, they don't go up as crazy as they did in the last 5, 6, 7, 8, 10 years. So now the rents went up. So now what do you think? What is the next period? The price will go up again. So how do you say in English? I say it's a Korrektur. Yeah. Now the prices are stable. They don't really go down, but also in good location. I'm talking about good locations with good quality of real estates. But now it makes a lot sense to invest, especially if you don't live in this real estate. Some Bundesländer are giving low interest rate loans for. That's really funny. It's a good question, but it's really funny. I know a lot of people wanted to get those interest rate loans, and then it was capped. How does it capped? And up to, I don't know, 700 million or whatever, like subventions and whatever. But interest rates right now with 0.5% is not possible. This is not what you get. Maybe there are subventions if you buy a new building, but I can tell you a new building is right now very, very, very expensive, also because the material went up, the price of material went up crazy. So you should always compare, okay, what makes more sense, to take a used apartment or to buy a new apartment. I can tell you a new apartment makes no sense right now, because the prices are too high, and you don't get that much of rent comparing to the price. So it's also, you have to calculate the ROI.
John, if you don't mind, there was like a question also from you because I was saying that ETF doesn't serve only for, or shouldn't be, or served me, did not serve me as for retirement. And you asked me what kind of like financial tools serve you for retirement. So I would like to share this question because it was a good question. I think if you have the financial opportunity and you think about retirement, the end goal should be real estate. That is a no-brainer. But there are other products besides ETF, like pension plans. They can and should be built up in like a big financial portfolio because they give you tax advantages and plus it's a security. An ETF portfolio is great if you take the money out and invest it in another big thing. Let's say real estate, your own business. It brings you further. It's like a vehicle. Like if you ask me ETF, how it should serve you better, I would combine it with like an insurance plan if it's purely for retirement. Because if you take the whole amount out of your ETF portfolio, for me, it would be very difficult to like live from that money, even if I have like 100,000. But if you invested, for example, mix an insurance, you can have a passive, like you can have an additional income forever because it's a lifetime payment that you get. And some companies also let you keep investing the money also after retirement. Not many, but only because of that it got interesting because you can keep on investing that money. So yeah, like if you have the possibility and you have like a great budget, you should do a little bit of both because all financial tools have different purposes. But for retirement, definitely like real estate. Yeah, because I know many people, Samuel, they have like in Germany, just one plan. You know, I have one in Germans, mostly Germans. I have one in Rentenversicherung, you know, and I have one insurance plan. Just, yeah, Bausparen. This cannot be a solution. It can be one solution, you know, but not the solution. So it is this have as much as financial tools as possible. That's the right way to go.
Yes, that's correct.
Yeah.
And as Alicia said, like, I mean, the real estate as a product, as an investment, it's Champions League. It's the highest. It's the most expensive investment. So it's really it should be the goal and the way to a real estate like ETF. That's also a very good decision.
Thank you, Rose. Stepped out. I'm going to stop recording.
Is there a limit to the amount of real estate a private individual can have? No, there's no limit. But in case you have a lot of real estate, then you should think about some concepts like an GmbH, like a holding or whatever. But this is something, yeah, I would say from the 8th or 10th real estate you should think about. And but also in this, there I have a lot of options and tools I can give you and show you. And also we are very good connected to people which take care about these constructions or these things.
Is there another one? And for everyone who's watching, besides now, let me stop recording.